Hello again, fellow BeachBum traders. Welcome to part one of our weekly trading game plan for the trading week of August 22nd through August 26th, and title What Goes Up, and we'll talk about what happens to what goes up in the markets and how can we benefit from that, how can we trade, what goes up, what goes down in the markets, and make money no matter which direction the market goes. So thank you for joining us for our live stream today. Part one, we'll talk about our market analysis, our strategies, the themes we see, some trading ideas, etc. And this will all provide us with our input data for selecting our stocks for our various watch lists for part two at 10 a.m. tomorrow Eastern Time. So we hope you will come back and join us for part two, where we'll talk about updates to our watch list. We'll talk about trades we made, etc., and further trading techniques, etc. Welcome, Walter. Thank you for joining us today. Captain Maddie, glad to see you both. Hope you had a good trading week. So we'll jump right in. So again, we'll talk about, what goes up, and we have a bubble, a balloon, and how we can handle that when things go up and when they go down in the markets. So again, we'll jump right in. We'll look at various indices and how the markets finished up on Friday in FinViz. You can find our links in the description box below to FinViz. Also, here's our notes for our weekly trading game plans. You will find a link to this Google Drive folder. It's a public folder. It has our notes for our weekly trading game plan, so you can access these links, our notes, etc., for further reference. So we can see on Friday, I actually developed this title and started putting it together on Thursday, and Sonia put together the thumbnail on Thursday before we had the, what goes up must come down. Well, on Friday we had the must come down piece. So we could kind of see this starting to roll over on Thursday, which we'll see when we look at the indices. But then on Friday, we had a pretty significant dump. We can see the NASDAQ went down 2%. Dow down almost 1%, and the S&P over 1%. We can see most stocks are still 71% are still below their 200-day moving average, but a majority are now 71% are above their 50-day. So when we see the indices, we'll see they're hovering between these moving averages. Pretty much everything was red. Tech particularly got hit, except for some healthcare. We'll look briefly at the sectors until we'll talk about sector rotation, some today and more tomorrow. Welcome, Ray Harnavius. Sorry, I probably butchered that. I apologize. Glad to see you. Thank you for joining us. Good morning, Nug M. Thank you for joining us as well. So if we quickly look at some of the headlines, recent headlines from today, talk about hedge funds, why the bull run in stocks may be morphed back into a bear market, and actually we'll look at the indices. Did we ever actually get out of a bear market? I'm not sure we ever got out of one. This very much could have just been an extended bull rally in an overall bear market. Some settlement stuff. If we look at some of the futures, we can see oil had pumped up and now it's coming down. Natural gas, boy, what a wild ride that had this week, and we'll talk about why that is and some irrational behavior we saw in natural gas this week. So gold has been kind of declining, gold and silver. A lot of this is due to the strength in the dollar. We'll see when we get to the futures that the dollar really strengthened again. You can see the euro to the dollar is almost at parity again. And we see that the Treasury bond yields really jumped up. The 30 year is now 3.22. The 5 year is 3.12. And we can see we still got quite a bit of an inversion. So, and again, inversion tends to be a predictor, what they say, a predictor of recession. And we saw the GDP data said we've been in a technical recession, whether they want to say it's a real recession or not or whatever. Technically, we're in a recession, and the bond market's been flashing that red light for quite some time. So now we'll look at some of the indices real quickly. So the SPY, we can see it had a nice run up, peaked up, and rolled over. If I zoom this out, and we see that pivot point around 416. So again, there's the 200-day moving average, the 50-day moving average, and as we talked about last week, not surprisingly, it went up and about touched that 200-day moving average and got rejected. And that's pretty much exactly what we were talking about last week in our weekly trading game plan, right? Is we kind of expect one or more tests of that 200-day moving average, and until it can break out of that with some volume, it's going to get rejected, and it's probably going to come down to the 50. The 50 should turn back up. It hasn't turned back up yet. So again, this would be an indicator. This morning star, as they tend to call that type of candle. These are all indicators of downside. So just from that, I would say, if we had to think which direction it's going to go down to retest that 50-day moving average until that 50-day moving average turns up, and it's going to have to test this 200-day moving average several times to weaken it unless we can get some volume. But right now we're also in the summer, what they call the summer stock market doldrums, which means volume is kind of light. We also saw that in the volatility. The volatility's been bopping up around 20 a little bit, but even on the news that caused the markets to drop, we didn't get a whole lot of pump in volatility. So we see the Qs didn't actually even make it up to its 200-day moving average yet, and it already has rolled over. So again, eventually it's going to have to test that 200-day moving average, and it will need some volume to break out. But it had a nice run up. Some people, I'm sure, made some nice money in tech until the bubble burst and it rolled over. Again, this candle is a little indecisive, but it looks more like downside. DIA. Well, good. I'm glad, Captain Matty. Just checking the chat, see if there's any questions. So, again, we see the Dow actually made a run at it breaking through its 200-day, failed, got rejected. So again, as we talked about, it's going to have to test that moving average, and it's going to have to break it with volume. But it tested, got rejected, turned down. And again, one would expect some downside until until that 50-day moving average turns up. The Dow does look a little stronger than the Nasdaq, and the S&P and Dow look in better shape than the Nasdaq, the Qs. IWM similarly tested the 200-day moving average, got rejected. Kind of a morning star with a little bigger body, got rejected, bounced down. Looks like an inside candle. I'm not an expert at the strat method. I don't know if there's any strat traders out here, but they could probably talk more about what that means. One of these days, I'd like to learn more about that method and how it works. I know it's a popular one. And to answer your question, that's a good point, Captain Matty. One of these days, I should probably do a more, instructional, educational video on moving averages. What do they mean? How do you use them? The popular ones, etc. There's different types of moving averages, different periods. Everybody's got their favorites, etc. That's a real good idea for an educational video. As I am able. I'm sure in Investopedia you can find a lot of data on those, but again, there's a lot to talk about. If we look at the VIX chart, this is a little deceptive. I don't know why it's showing this pop-up in FinBiz. I saw that. We'll see it in the futures too. Really, the VIX is sitting right now. I think I'll look in TOS. I think it's around 20, might be a little over 20 right at this second. So let's see. Right now it's sitting at 2060 in TOS. So I don't know why that's showing like that. It's been declining. We had a little bit of volatility around some of the news when the S&P rolled over on Friday, etc. But it's essentially been testing that 20 level, dropping a little below, retesting the 20. But the tendency is for it to go down. We don't have any dramatic news or anything that would cause a dramatic pop in volatility, and therefore, although the down market's gonna hover around 20 until it settles down a bit. Eventually, unless something happens, it should come down to 18 and then maybe even 16. We'll talk about the next FOMC meeting coming up, and that may be the point at which volatility will increase. So I think we covered the indices. We'll look at groups and sectors. Just checking the comments real quick, make sure I'm not missing anything. So let's look at groups and sectors. And again, we have videos on how to use these various screens in FinViz in more detail. So if we look at the groups tab, we see the sectors, and this is kind of interesting. Obviously on Friday, everything was red. Technology, which had been leading, pumping up during the week, was one of the worst performers. Consumer cyclical, the only one that was almost green was healthcare. But if we look at the week, we can see the strongest were our typical strengths were consumer defensive utilities and energy. And these are all the inflation defensive stocks. Energy's been, a major theme. They've been rotating in and out of energy. So, we saw energy was down quite a bit on Friday, but it was up slightly for the week. Basic materials, again, strengthened the dollar. Hit any dollar denominated commodities. And for the month, again, we see utilities, energy, basic materials was in the middle. And again, we saw healthcare at the bottom for the month. And again, I think this was a sector rotation as they looked at, okay, who's the worst performer? Let's put money into the worst performer and rotate money to there. Now, when we get to our strategy section at the end of this video, we'll talk about these sector rotations and how they've been rotating in and out of energy on a pretty regular basis, and also some potential divergences that I may be seeing in some of these sectors. Nug M is asking where to post when you're up at 4 a.m. I'll show you real quick, because hopefully you're already in our Discord. If not, you can find an invite to our Discord in the description box below. Also on our homepage in the links section. Our homepage is beachbumtrading.com, bum without the U. Here's all our social media sites, all the tools we use, so you can find our links to FinViz, etc., all of the trading platforms we use. I mentioned Investopedia, and you'll find a link to that as well in the reference section. And if you're in our Discord, the most popular channel is the Beach Party channel. So if you're up at 4 a.m. and you post in the Beach Party channel, hopefully I'll see it and say hello. So sorry I missed your message the other day. I was busy working on videos. So if we look at the industries, again, we'll see a lot of energy. Healthcare was top. Some energy was top on Friday. Most of them were negative. The most negative, some solar, again, wrote to silver, gold. Silver particularly got hit. This one's interesting. We'll talk about this more in our strategy I'll give you a prefix to that strategy. As I'm seeing some divergence now in uranium from the energy sector in general, and that I think may provide us with some opportunities to swing some of these uranium names again, like we have recently, and made some nice money. So again, we'll talk about that later and in more detail what uranium names we want to look at for potential swing trades for divergence of uranium from the oil and natural gas and the energy sector in general. So again, for the week, we see more energy. So we're top performers. And the worst performers, again, silver, uranium at the bottom. Even though oil was at the top, silver, uranium were at the bottom. Then again, energy, a lot of energy. And again, silver is having a rough month. So those are some of the industries, sectors, etc. Okay, let's talk about the economic data. Um, And again, hopefully you're already a member of our Discord. If you're not, again, you can find the link in the description box below to our Discord. And as this economic data comes out, I try to post it in the Surf the Markets channel in our Discord. So I take a snapshot from investing.com and I also post the raw data there as it comes out. So recommend again you join us in the Discord. So Monday we got some manufacturing data. It was kind of poor. We also got this National Association of Home Builders housing data, and it was very poor as well. And this NAHB came out and said we're in a housing recession. Now we've talked about for a long time that we expected a downturn in housing. We've seen that, and now they're saying, okay, yeah, we're in a housing recession. So again, building permits was. Tuesday it was a little more positive. Housing starts is way down. So again, housing's in a recession. Industrial utilization wasn't too bad. So manufacturing is doing okay. Housing is poor. Retail sales actually was better than expected. But what we're seeing is that certain retailers, we saw Walmart had to forewarn that it was going to be poor, and they came out a little bit better than feared. They made some adjustments in their inventory, etc., so it wasn't as bad as people feared, but it still wasn't great. So I'm looking at Walter's question. What are your thoughts on the correlation of DXY? Okay, that's the dollar and the indices. Well, the strong dollar drives down anything that's dollar denominated. So your commodities, gold, silver, oil, natural gas should have gotten hit, but it's got, again, some other factors with some major volatility. So also companies, global companies that are sensitive, and we talked about this weeks ago when the dollar was strong previously. The fact that foreign companies that do a lot of business in other countries are getting hit hard with the foreign exchange. When they exchange that foreign currency back to dollars, they're losing money. Now, Apple, I think it was, has learned that they can hedge that and not be hurt by that foreign exchange. So we'll see if other companies learn that lesson and don't have negative earnings because of exchange rates. Because again, we'll see in the futures the dollar is very strong again. So this was interesting too, is the crude oil. So we had the distillates. Okay. So oil inventories dropped an unexpectedly big amount on Wednesday. It dropped by 7 million barrels. We saw oil was back up over the 90s. Also, we got the FOMC meetings on Wednesday, and this was part of the rollover towards the end of the week. But we knew this. Further rate hikes are anticipated, whether they're 50 basis points, 75 basis points. We know they're hiking, so interest rates are going up. We've known this for a long time, and their restrictive policy is required. So quantitative tightening, and just a reminder that quantitative tightening is supposed to accelerate significantly in September. So we should see more impact on the bond market in starting in September. So Thursday, again, we saw jobless claims was continuing jobless claims was a little better than expected, and initial claims was significantly more was better than expected. And again, I think that is part of what prompted the decline in the markets is the fear that if the job market is healthier, then the Fed can be more aggressive in their rate hikes. So I think that's what caused bond yields to jump, which put pressure particularly on growth stocks, tech stocks, etc. So then we saw that decline. So if the Fed believes they can raise rates without negatively impacting the job market, then they can be more aggressive. And I think that's a major contributor to the decline in the market the rest of the week. Good morning, Tanvir. Glad to see you here. Thank you for joining us. So then we got mixed messages. There's mixed data about layoffs. Here, this article, and you can get a link to this article in our notes. You can see no sign layoffs are rising. Let me give you my opinion very quickly about this. I also heard another news report that like 50% of the company CEOs are planning to lay off. But we haven't seen that yet, although we keep hearing the tech companies are all laying off. And I think that's where the layoffs have started, is in the technology companies. And we talked about weeks ago that this is likely going to be a domino effect, a cascade effect. Whatever those people buy, they're going to get less business, so then they're going to lay off. Their suppliers are going to get less sales, so they're going to lay off. So it's a domino effect. The area I don't think we're seeing layoffs yet is I think the services industry is still ramping up. They're still trying to fill shortages that they've had. So the net is, we're not seeing net layoffs, but in particular sectors, I think the layoffs have significantly started. Again, if anybody has a difference of opinion, please put it in the comments below. We'll talk about it in the Discord, etc. But that's my theory from what I'm hearing. So. And then Friday was August options expiration date. So again, we saw some, additional volatility in that regard. Tanvir says the China economy is in shambles. Yep. That's why we don't touch Chinese stocks, right? Yeah, we haven't touched individual Chinese stocks for about a year, and we swing Chinese stocks with yen, and we have a couple others too in our ETF spreadsheet nowadays. But typically it's yen, YINN, and yang. Yen is long, yang is short. And we can swing the Chinese tech stocks that way. So that's what we've been swinging. Yang's been running up. I know several of our BeachBum traders like swinging Yang, and that's been a very profitable swing trade for us for quite a while. So upcoming events. We've got the next FOMC meeting is not till September. We've got September, November, and December, and we expect approximately 1.5 additions to the interest rates across those three meetings. So whether it's 50-50-50 or 75-50-25, it doesn't really matter. Across these 3 months, it's going to go up another about 1.5. This week, we have this Jackson Hole Economic Symposium. You can see a link to it in the notes if you want to know more information, but essentially it's going to be, they meet, they talk. We might, a lot of people are going to be listening for any signs. Is this FOMC meeting going to come out with a 50 basis point or 75 basis point hike? And, what are they going to do with what's their view on employment versus inflation, etc. I think we kind of know they have to raise interest rates. How fast, how far is what will be debated. But we'll hear some news, and there'll be a lot of talking heads talking about what the Fed members are saying coming out of that meeting. So I didn't get the Benzinga graphical version of the earnings calendar yet. But again, you can click this link, go to the earnings calendar and investing.com. It's very detailed. Earnings should be winding down. Again, we're starting to see some more divergences. They're realizing certain companies may be outperforming. We see Palo Alto Networks. That'll be kind of big for technology. See some financials. So again, I would recommend, if you're looking for a particular stock or sector, etc., take a look at the earnings calendar, see who's coming out this week, see what impact it might have on anything you're looking to buy or that you hold. So it should be winding down, but we've still got quite a bit. So when I get the Benzinga graphic, I will post that as I typically do also in the Surf the Markets channel in our Discord. So Tanvir says, my Fortune 50 tech company has issued travel and expenses bans. Yep, that's not, yep, that's not unanticipated costs. First they freeze spending, right, and they freeze hiring, and then they cancel open positions, and then they lay off. And we talked about that sequence, weeks ago. That's very typical. Yeah, which the fact that they're freezing their spending means that anybody that was counting on those sales is not going to get those sales. And the fact that you're talking about a Fortune 50 tech company, now we talked about this weeks ago too, is typically they buy computer hardware and enterprise software. And that means that whoever's selling that's not going to get those sales, right? So their sales are going to go down. And again, it's a domino effect from there. So again, be cognizant of that. Those software companies, enterprise software companies, computer companies selling to those, Fortune 500 tech companies, their sales are going to decline, right? And again, it's a domino effect from there. So. Okay, so let's quickly look at the markets screen in Weeble. Just a quick reminder, Weeble's still running their 12 free stock deal. This is the largest stock offer for free stocks from Weeble that I've ever seen. If you're not, Weeble is our favorite trading platform. It's what we use to do most of our trading. If you're not already using Weeble, you can get an account, get 2 free stocks up to $300 each just by opening an account. And then you get 4 to 10 more free stocks by depositing any amount, a penny, a dollar, whatever, each valued up to $3,000. So if you're not already using Weeble, I would recommend taking advantage of this offer while you can to get 12 free stocks. You can find our affiliate link in the description box below, in the platform section of our webpage, etc. So again, you can get 12 free stocks. If you don't like the platform, you can always cash them out and take your money. So this is the market screen on the online browser version of Weeble. I tend to use the online browser version the most. So we could see Friday, we had a lot more decliners than advancers, but the declines were relatively small. We look at the net inflow, we see the NYSE actually had more outflow than the NASDAQ. So even though the NASDAQ had a major decline, we see the inflow was declining. It actually was outperforming the NYSE. So another nice feature, this market screen in Weeble is you can see the immediate earnings calendar for the near-term earnings releases. It'll also tell you if it's before market open or after market close. So again, for the near-term releases, this is very helpful, in my opinion. Thank you, Captain Maddie, for reminding everybody. Yes, please hit the like button. Please share this with your friends and fellow traders. We really want to grow this community. We want to grow our Discord, get more participants. Other traders can benefit. Also, if you know somebody that left the market because they got beat up in the past, tell them. Our goal is to help people be successful in their trading. And we're here to educate. Again, this isn't financial advice. We're not financial advisors, but we're here to educate and help you be successful in your trading. So again, The more people in our community, we can all help each other out. It's for everyone's mutual benefit. So thank you again, Captain Maddie, for reminding everybody. And hitting the like button really helps the YouTube algorithm. It helps it publish our videos to more people. So again, it attracts more, a larger community. So again, we hope it benefits everyone. So if we look at the best performing industries, we see coal did well, government. Let's go look at the all. Natural gas, again, been very volatile. Some of the consumer defenses didn't do real well. Leisure, again, consumer discretionaries aren't going to do well. Pharmaceuticals kind of mixed. Educational mixed. Specialty retailers mixed. And communication sector's just been beat up severely. Because some of the ETFs will kind of see the direction of the markets. So down on the Dow again, I expect down. So there are shorts. So there's two shorts ETFs on the S&P. Up on the VIX. So they're betting on increased volatility. That BITI is actually a short on Bitcoin. So there's a lot of bets on shorting Bitcoin. Small caps bear, Russell bear. So again, all the indications right now are down. So industry ETFs, again, from Friday, it's mostly red. A little healthcare. So energy, positive. Wheat, positive. Cotton. So again, those are not, they're kind of dollar denominated, but they don't get hit as hard. So we'll look at those in the futures in a minute. Soft coffee. So it looks like the commodities are going back up a little bit. So 20, and we're going to talk about this tomorrow, is our play on the 20-year treasuries, our plays on the treasuries. But yeah, we're definitely going to talk about that tomorrow. And currencies. We're also going to talk about currencies tomorrow. We'll see this in a second in the futures. But again, we're going to talk specifically about our plays on that tomorrow. So please, everybody, come back tomorrow for our specific ways of trading these opportunities in the treasuries and in foreign exchange commodities, because we don't directly trade Forex yet. So if we look at the futures, we see this nice rollover. Actually, we saw this start to happen on Wednesday, Thursday. We see the rollover. The futures is indicating it's going to continue. So again, just like we saw in the indices, we expect further downside unless there's some kind of catalyst to turn it around. We can kind of see these support levels, so that we've got continued downside on all these guys. The Russell, it might be approaching a support level. See the decline in the VIX. That pop is a strange anomaly. See oil kind of bottom and bounced up. So it bounced into the 90s. So it's kind of hovering around 90 right now, because we had that unexpected decline in inventory. And again, natural gas was just crazy. Let me see if I can find that news item. When the natural gas storage, yeah, there it is. On Thursday, you see what happened is the natural gas storage number came out way below expectation. And we'll talk about cold, KOLD, and boil tomorrow, which are ETFs. Cold is the short on natural gas, and boil is the long on natural gas. And those are typically the ones that we play. But when that came out, they shot natural gas back up to essentially its high of 960 something, and then they spiked it down, and that was really strange. all I can say, and we'll look at it again more tomorrow, is I think it was a trade imbalance in the orders, the buys versus sells, that after it spiked up, I think there were just so many sellers that and no buyers that it dropped down in the eights, and then it bounced back up. Now we can see it's been around the 930s. So we'll talk tomorrow about how we plan to play natural gas. A lot of opportunities because, as you can see, there's a lot of volatility. So if you're very nimble, there's a lot of money to be made in these areas, but you have to be nimble and be careful because it is very volatile. See decline in gold. Again, the dollar strength's driving all these precious metals down. Copper's kind of making a rebound. Then we see cattle has been running high, but hogs is down. So like the cow ETF is not really going anywhere. All the other commodities kind of rebounded. See, wheat's down, so that's why they're betting up on wheat. And again, tomorrow we'll look at some of the ETFs in these areas, see if there's anything that looks attractive. We see lumber really fell off. It's probably because the housing market's now in recession. Yeah, I'm going to talk about semiconductors in just a second. Tanvir and Captain Matty, what are those ETFs trading mostly, or why do you like them? Well, in general, the why do I like them statement is number one, because a lot of our good morning, Mighty Soldiers trades. Glad to see you here. Thank you for joining us. Why do I like ETFs? Well, one of the reasons is it allows me to short in retirement accounts. Most of our money is in retirement accounts. I do most of our trading in retirement accounts where I can't short individual stocks. But I can buy an inverse ETF that allows me to short just all kinds of commodities, indices, various sectors, currencies, etc. So that's kind of where I really got heavily into the ETFs, was the ability to short. Now I also find that you also have these leveraged ETFs, and I really like them. I know they're added risk, they're added volatility, but I like them because they're a higher risk to reward profile. So it gives you more reward for you've got 2x, 3x, etc. So a smaller move can get you a higher reward. So that's some of the reasons I like them, and I won't babble too much longer on that. But the other thing you'll keep hearing is the lack of single stock risk, right? As an ETF is a basket of stocks, and so if an individual stock, tanks, it doesn't necessarily drag that whole ETF down. Whereas if you were in that single stock and it had bad earnings and it tanks, well, you're stuck there. But in an ETF, if it's a basket of all oil companies, one oil company tanks, the others don't, they do well, it balances out. So I hope that answers the question. Again, I need to do more educational videos on ETFs and leveraged ETFs and inverse ETFs, and how to use those. So Mighty Soldiers Trade says I prefer puts to shorting. Yeah, puts. Yeah, that's another way you can short. Again, in a retirement account, can't buy naked puts. I have to buy cash secured puts or a put spread. So that is another way to short the markets, etc. So we looked at futures. Okay, so here's some of the trends, themes, strategies based on a lot of this data. Again, I won't let this get too long. Good morning, DS Greg. Thank you also for joining us. Glad to see you again. So one thing I wanted to talk about is this Inflation Reduction Act, and I have a link in the notes to this article so you can read this article in more detail. It talks about, 4 ways that the Inflation Reduction Act will impact the economy right away. And I'll just, they're also pointing these things out. We talked about this Medicare thing, being able to negotiate lower prices on pharmaceuticals, and that, in my humble opinion, I think that's going to stifle investment in biotech. So, we shorted biotech using Lab D. I think quite a few of our BeachBum traders made some money doing that. And again, we'll review some of that and talk about that in more detail tomorrow too. So another thing I wanted to talk about is this tax on stock buybacks. Not as broadly advertised, and I'll show this in a second. Is there? Well, I'll show it in this article. So in this article in the middle, they talk about where are they getting the money for this Inflation Reduction Act. So you see a 1% tax on buybacks. You can see a repeal of this drug rebate, savings on negotiating prices for Medicare. So, and then they show you where that money's going to go. So, clean electricity, climate change, etc., deficit reduction, healthcare, etc. But the reason I wanted to point out this tax on stock buybacks is because what I think we're going to see, again, this is speculation on my point, not financial advisors, but I think we're going to see a rush of big stock buybacks. Anybody that's sitting on a bunch of cash, like Apple or any of these other companies that are sitting on a bunch of cash, and they're going to get taxed if they do a stock buyback in the future, and they're also going to get taxed 15% as a corporate minimum tax. So any profits that they have, they're going to be taxed on at 15% minimum. And if they buy back stock in the future, they're going to get taxed 1% on. Well, if I buy it all back now, then I don't show that profit and I don't get hit with that 1% tax. But after that goes into effect, I'm not going to buy back any stock, right? Because I get taxed on it. I can go spend that money somewhere else where I don't have to pay taxes on it. So again, if you're in a company that has sitting on a lot of cash, they have an authorized stock buyback, or they can authorize one, this benefits shareholders because it reduces the outstanding share count, and therefore the price of your shares should go up with a big, and it also gives support, right? Is if the company's smart, they wait for the stock price to come down a bit, and then they buy it up. So it provides a support level for those types of stocks. So something to be aware of. Another thing that's in this article that was not broadly advertised is that it has changes. This Inflation Reduction Act has changes to oil drilling regulations that may spur greater oil production. So again, this isn't advertised because, Biden's he doesn't get along well with the oil companies, and they think he wants to put them out of business, and so they weren't going to produce more or essentially invest anymore. So this act has some changes in it that may spur further production, which more supply, oil price should go down, right? Excuse me, sir. So, okay. So DS Greg says, do you think we're in a bear market rally? Yeah, we talked about that. Yes. We've been in a bear market. We haven't broke the 200-day moving averages. We looked at all the indices, so we can't really say we're in a bull market. So yes, that rally up would be considered a bear market rally, and we've been talking about that, for quite some time now. Where we go from here, again, we looked at the indices. We think there's a short-term downside, and then we'll have to, wait and see where it goes from there. So. We talked about China a bit. Also, there were these additional congressional visits to Taiwan. They had backed off on their military exercises, and then this other congressional group went there and stirred them back up again. We've talked about this, watch out for further Chinese retaliation. So if you are holding a company that may be vulnerable to further retaliation, um, just be careful. And also, we saw these Chinese companies delisting, and my hypothesis, my speculation is that there's something behind that, and we're going to continue to see that. So again, a lot of risk in individual Chinese stocks. Again, we've stayed away from them for well about a year. So, and we only trade them using ETFs. So we've also been talking about sector rotation, and again, given the current market conditions, it's choppy. We've got the summer stock market doldrums, so it's low volume. We're seeing a lot of the sector rotation, even intraday. They've been rotating in and out of energy, even within the same day. So you watch these sector rotations, and tomorrow we'll look at our sectors tab in our ETF spreadsheet. Great way to see these rotations occur. Where are they coming? Where are they taking money out of? Where are they putting money into? And then you can trade accordingly. Now, another thing I wanted to point out for this week is it appears that, before biotech, semiconductors, and all the tech were essentially moving together, and it looked like people were just putting money into Qs or putting them into ETFs that were general tech, and therefore biotech, semiconductors, and tech were all moving together. It appears now we might be getting a break of that. We might be getting a divergence where biotech and semiconductors may move differently from technology. So even though tech might be going up, semiconductors on bad news might be going down, or I think on um, Thursday or so, technology was up and semiconductors was down, etc. So I'm watching for that divergence that we've been talking about in the past so that we can trade these guys independent from just the Qs or a technology ETF. Similarly, I did see that there's a divergence. We had oil going down on Friday, natural gas was going up, and we saw in the groups tab that uranium was down pretty heavily for the week, even though natural gas was way up and oil pushed up above 90. So again, I think these divergences may give us some opportunities. And again, we'll talk in more detail tomorrow about how we might want to play each of these independently from the overall energy sector. So I hope that helps. And welcome, Ellen Hirschberger. Glad to see you here. It's nice to see new people here. I really appreciate it. So one last strategy idea I wanted to share is Putin threatening further reductions of natural gas to Western Europe in the coming days. So again, he's already, reduced the flow in that Nord Stream 1 pipeline. Giving excuses. I won't, go into the politics too much. But again, if they reduce it further, that was part of the pop in natural gas prices. The European natural gas prices are through the roof. They have a shortage. They're trying to cut back consumption. But if he reduces supply further, it's going to drive the European prices up, and it will impact our natural gas prices. So again, we'll talk about tomorrow, how to continue to play these spiky volatility in natural gas. So I hope that all helps. A lot of information. Again, I hope this helps. Tomorrow we will take all this information and we'll pick which stocks do we want to put on our watch list and our bullpen and our shopping list. What kind of trading techniques do we want to employ, time frames, etc. For the trading week of August 22nd through the 26th. So I've got a few minutes. I'll field a few questions if anybody has a last minute question in the chat. If I missed your question, please repost it. I apologize if I missed anything, but also please feel free to post your question in the comments after this video. Post it in our Discord. You can contact me through social media. Again, all of our links to our social media sites, to our Discord, etc., you can find in the link section of our homepage. Again, our homepage, beachbumtrading.com, bum without the U. So again, if you ever have any questions, again, post them in our Discord, tag me. I'll try to respond as I am able. Okay, I don't see any immediate anything. Individual stocks we'll talk about tomorrow. So if you have any particular questions of individual stocks, please bring those up in the part 2 tomorrow. And again, I appreciate all of you for joining us today. And yeah, please smash the like button if you're not already subscribed. We hope you will subscribe so you'll be notified of all of our live streams, our videos, etc. And join us in the Discord, and we'll keep on having this conversation. So thank you again. You all have a great day, and we'll see you tomorrow, hopefully.